The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there had a fun and exciting and or restful weekend, and you dodged all the crazy storms that were ripping up the Chicagoland area this past weekend. My name is Mark Longo, and I am your host for this joyous frolic through the world of options.
Is that what this is?
That's exactly what this is today. A joyous frolic indeed. We are a man down, but we can still frolic with the best of them. Joining me is the usual rogues gallery of characters, sans one, starting off with that voice you already heard off in the distance, Mr. Tinney himself, a.k.a. the Seabass, a.k.a. the Greasy Meatball, none other than Mark Sebastian from OptionPit.com, the man of many nicknames.
Yes. Good time. So, a little bit of a sell-off today, but, we're going to talk about this, but one of the most unimpressed, the market was I don't know that I've ever seen the S&P down 15 handles and the market so unimpressed.
Yeah, it doesn't seem like it wasn't a rousing rout like you might have expected.
No, it was really not. So, really interesting.
Try saying that 3 times fast.
Rousing rout. Yeah, no kidding.
Sometimes my alliteration gets the best of me. And then also joining us in the Options Express chair, none other than John Griegas himself from Options Express, joining us far too sporadically for our taste. Sir, welcome back to the show.
Good to be back. Yeah, I got to agree with Sebastian. I think the VIX was up, 0.83? Yeah. And, for a Monday following an expiration, we're usually slammed, and the market's looking like they might, tip over here a little bit. It was pretty quiet.
Yeah, it was weird. I don't know if you want to talk about this now, but on a strike-by-strike basis, I had vol down almost across the board. So, kind of interesting.
Interesting, because when you read the journals right up this morning, they were writing about how the skew was popping today. So we can
No, it was not popping. There was no popping in skew.
Exactly.
Anybody who said big skew popping and little skew dropping doesn't know what they're talking about.
We'll have to call our buddy Chris over the Journal and set him straight. This is, after all, his second week. He should know this stuff by now,
Yeah. No, it popped a little bit on Thursday and Friday, but then not today. They sold it right back.
And listeners, we are a man down. Uncle Mike Tusaw is off in the mountains again. He had a mountain sabbatical that he could not reschedule. A man down, but none the worse for wear. We're going to roll right into the interview block.
The interview block.
Welcome to the interview block. This is the section of the show where we grab someone from the options market and we drag them kicking and screaming onto the show and force them to answer our questions and listen to Sebastian for an extended period of time. It is quite the ordeal, and today we are lucky enough to be joined by Paul Gigante. He is, what was your title over there again, Paul?
Special Products Consultant.
He is the Special Products Consultant.
Wow, they really gave you a lot of distinguishment with that title.
You can't even throw a senior in there or anything like that? Senior Special Products Consultant?
I'm going to have to lobby for that.
Yeah, couldn't they give you special counsel on product development to the NASDAQ? That's how I would have put it.
Okay, that's my next title.
You know, like a Kenneth Starr kind of thing.
I'll take whatever I can get, as long as the paycheck says something with a couple zeros in it.
And then maybe they can add business development on there too, because everyone seems to have that on their card these days as well.
Mm-hmm.
We're all out there trying to develop business. I think that's what the whole idea is.
Yeah.
Well, Paul, you are indeed joining us from the land of NASDAQ, and I want to thank you for coming on the show. And what we always do with newcomers to the program in our interview block is we give them a chance to introduce themselves to our audience and give a little bit of a background, an overview, a brief history, if you will, of your experience in the options and derivative space. So, Paul, go ahead and enlighten our listeners.
I'll try to keep it brief. I was started as a market maker in 1985 on the floor of the CBOE after college, and started working for Susquehanna in 91, and worked for Susquehanna in just about every capacity they had in the Chicago office and a few in the other offices through 2008, when I have taken a couple years off to find myself. Now I find myself at NASDAQ doing special products consulting and right now concentrating on the alpha indexes.
So you survived the great culling of 2000 and 2001 over at Susquehanna.
Oh, sure. Yeah, unfortunately, a lot of that was me doing the culling.
Oh.
From 2004 through 2008, I was the Chicago manager in charge, or associate director is what they called them at Susquehanna, another creative title.
And he was always around. He was always out back. I traded in a couple Susquehanna pits, and he'd always be floating around back there. And where'd they have you, in Google toward the end of what you were doing?
Last 2 years was at Google.
Yeah. So
plenty of fun in there. I certainly created a few options.
It was hard to avoid a Susquehanna pit for a while there. I think that was part of what led to the culling, is that the presence became so pervasive on the floor of the CBOE that when the market took a downturn, you guys just had too many DPMs.
Well, I mean, it wasn't really the number of stocks; it was the number of people. As the technology got so good, and it's funny, we thought it was good in 2000, 2003, and now that's the stuff that you see on every on the worst websites out there for online trading.
Mm-hmm.
Wouldn't touch the Options Express model of today. So it's funny that's what we thought was good. But once we got that, we didn't need nearly as many people, and it was unfortunate because there's some great people that were out there that were let go during those years.
Interesting point, too, about how just the tools have evolved so much to allow audiences to use essentially what were pro-grade tools just a few years ago completely for free. Brokers like OX and others that can put these products out there, and your average retail guy now can look at his skew and look at his Greeks and these things that were voodoo with a handset on the floor in 2000 and 2001 are just now commonplace. It's amazing how the marketplace has evolved in the past 5-8 years. Right.
Well, and beyond that is even like all the products that have kind of evolved. None the least of which is these alpha indexes. Paul, would you mind giving us a little bit of a history on the alpha indexes and what is this new product that NASDAQ's come out with?
Well, thanks for asking. It's developed by the same guy, Bob Whaley, who did the VIX products in the early 90s for the CBOE. He was employed he's a buddy of one of the executive vice president at NASDAQ, Eric Knoll, and they got together early last year and Eric asked Bob if he had any good ideas for a new product. Bob said, "Funny you ask. I've got something that that's been bouncing around in my mind for 10 years or so." And really, what it is Bob always seemed to find himself upset at executive pay in the late 90s when the stock market was going up 30% a year, and the guy that had his stock go up 20% had a huge year. And he didn't think that was very fair. You underperformed, and you still got paid. So Bob has always thought that, really relative performance is truly the way to judge people or any asset or any investment. So what he did was he and his professor buddy Jacob Segui got together and created this methodology for measuring relative performance. So what you can do is have two assets and really just judge their performance versus each other in a percentage basis. And what he's done is created a group of indexes that are right now option-only trading indexes that measure the relative performance between two assets. I'll use Apple as an example. It's one of the 7 that's trading today under the ticker symbol AVSPY. So that's Apple versus for V, SPY, spiders. So Apple's versus spiders. And it benchmarked to $100 back in January 1st of 2010. And they put, and we've been tracking the performance since then. What it's done is today it closed right around 130. That index was up. S&P was down $15. The Apple was down. What was it down today? Apple was down 82 cents. It relatively did great compared to the market. So AVSPY was up $1.27, and it shows that Apple, people believe in Apple management. Apple doesn't really care so much what Europe's doing, or I guess, figuring that's what brought the market down. And so you can trade options on this pair, and it's clever, it's fair, and gives the investor a chance to look up and see the S&Ps down this morning and say, I wonder if I'm going to do okay on my long position, because really all I care about is Apple's performance relative to the market, not Apple's performance overall.
I have to say, I love that the ticker symbol is self-explanatory. I wish more new products did that. That's fantastic. A versus SPY. I love that.
Well, I wish, unfortunately, we're limited to, 26 of those using that methodology. So we're actually changing over some of the balance of our group. And like right now, Google is UVSPY because G was taken by GE.
I take back my praise.
Z. So we're going to change them. It's going to be IBM SY in the future. Apple's.
Oh, I like that.
And so it's going to be the stock symbol and then SY. So we're getting there. But I agree with you, Mark. That was one of the reasons why we originally chose those. But in our haste to get these things out to the market, we probably didn't uncover the easiest way to do it. And when we realized that all these versus SPY was pretty self-explanatory. So really what people care about is the first one, the target stock, which is the IBM or Apple or Amazon.
Mm-hmm.
So essentially, I'm looking here, and you closed at 130.80 today. So essentially, it means that Apple has outperformed the S&P by about 31% since you listed it in June or January.
January of 2010, yes. So it's about 15 months running.
Yeah.
So,
now, is there a peak or a bottom for this? I mean, obviously, 0 would be a bottom, but is there a upper limit to this performance? Is 200 the top?
No.
Okay.
How this works is it's really the ratio between the two. So the equation would have it's 1 plus the performance in percentage terms over of the target over 1 plus the performance of the benchmark in the denominator. So what that does is it keeps it very close to one minus the other, how you would think about it, how you would prefer it. But in order to keep the index positive over time, you really had to use a ratio.
Gotcha.
So, I mean, if you think about it, the extremes, if Apple were down 50% and the market were up 50%, it wouldn't go to 0. It would go to about 33.
Right.
Now, we were joking before that John Grigas over at Options Express was saying, hey, I know that guy because he's the one guy trading these products on our platform. I know that name. In seriousness, I do love some of the products that NASDAQ and particularly Philly have put out over the past few years. I like the world currency options, but they seem to have languished a little bit when they haven't really been too much promotional muscle put behind them. And I told this to Tom Whitman down at OIC last week, and I'd like to hear your input on it as well regarding, this is an interesting product. I'm looking at it right now, and looks like the open interest is about 400 contracts, so obviously it's still growing a little bit. But what's the plan? What are you guys doing to really get the word out and get more people beyond yourself trading this product on a regular basis?
Well, I am allowed to trade it since I'm on the consultant side of this business for today. What we're doing really is trying to get we're getting out to as many folks as we can. We've seen 150 broker-dealers before the launch, and it's pretty hard to really explain something like this until people can see prices on the screen. So really, I feel like that was time well spent, but the real work is now. We've done a bunch of webinars. We're starting our seminar series. We started last week with one of the online broker-dealers. We're going to continue that through the summer and the fall. We're not going to do, we're certainly aware that something this innovative and different takes a little time to cook. We don't want to have the lead time like Bob Whaley's last product had. We don't have the patience for it. So I certainly don't, and I'm running around the country making sure that people know about it as best I can. And there's a good team I'm working with, embedded within NASDAQ already, and we're certainly not going to let it just go. We know, in our hearts, we know it's a winner. And it's funny, the joke around our office is we're going to look back in 10 years and say, can you believe people ever traded a Google option with all that market risk associated with it? So we're hoping that the shoe leather turns into orders.
Well, it doesn't hurt that you're doing a little radio show like this. That'll help get some of the word out. And, of course, whenever you're launching a new product like this, obviously liquidity is the first concern. You said you're talking to some broker-dealers. Have you gotten a lot of firm commitments on the liquidity side yet?
We have 4 designated liquidity providers, 2 specialists. Susquehanna, shockingly enough, left under good circumstances with them. So, and Eric Knoll was also there. So we're still good friends. And Group 1 are both have stepped up.
I know them.
And now, and we also have Wolverine and Citadel out there making markets. And
some small names then.
Yeah. Mm-hmm. None of them will fly by night guys, that's for sure.
Yeah. So here's an interesting question. Suppose I am a medium-sized firm, or I'm a prop shop or something like that. How do and I've got guys trading Apple, and I've got guys trading SPY and SPX. How does this product integrate into that basket of products traded by the pro firms?
That's an interesting question. There's a couple of different ways they could look at it. The pro firms, the small pro firms that I've talked to, have seemed to think that it would lower their cost of, free up some capital. They'd be able to be long an Apple and Apple volatility and short an index without the unlimited risk that it looks like when you're up and down. When you look at the up and down 10 and 20% for your haircut.
Okay.
And it's a lower transaction cost. You only have one. It's a one-stop shop for that two-part trade. I always look at.
Oh, sorry.
No, that's all right. I look at it when I was a specialist, and really my entire trading career, I would never go home with a market view. As much as my gut said we're going up or down tomorrow, so everybody else has that same thought. Individual stocks, you'd have one view or the other, but I was always pretty disciplined in making sure that I got up and didn't really care if the market was up or down, screws were up or down 30. Now, that I think what's interesting is this gives the retail guy that chance.
So this is kind of like toward the end, and you don't obviously I know you're big with Susquehanna and still friends with them, but toward the end, my understanding of Susquehanna and Group 1 and a lot of these firms, Timber Hill's been doing this for years. Sell a bunch of vol, buy a bunch of vol, trade where all the edge is in the individual names, and then put the hedge on in SPX. This is kind of a retail product that lets the general public do that. Is that kind of the whole point of this?
Exactly.
All right, now
got it in a nutshell. It's the retail guy or the smaller group gets to trade like a professional with a lot lower cost.
Hey, Paul, I was looking on our website here. And we do have some information on alpha options, and I know I've spoken about them at least twice on the podcast. But you have a lot of other securities that are coming out versus a SPY. You got Ford, which I think would garner a lot of interest. Hewlett-Packard. When do you see these index options launching?
I think we're hoping to get a little better open interest. Probably, I would guess we're going to start re-looking at the next names when we get to the open interest over 1,000. So we were pretty close to that up till last Friday. We had about 500 options, 500 open interest come off the board. So I would think sometime around the beginning of July, we'll start to see renewed interest in listing them. And we're also hoping that we're going to get something, the ETF versus ETF. We're back to the SEC to get approval for maybe a gold proxy versus SPY and silver, oil, and maybe a TLT.
Yeah. Now it's been mentioned. I think we know why you guys don't do the Qs because it's kind of another NASDAQ product. But could you see this going? If this really does take off, would you imagine putting this against, the Russell or the Wilshire, all these other big indexes,
yes.
The Wilshire 5000. So
there's no reason that it has to be SPYs. We just found it easiest and most and clearest for the first suite of them to come out and have the consistent benchmark. Mm-hmm. Since now so people get used to the methodology. Once beyond that, it's really customer driven. If there is interest in anything and the SEC will let it happen, it will be out there. We're out there to make sure that we get trading. We're agnostic to the product pair.
Right.
Well, Paul, we appreciate you coming on the show. We'd always like to discuss and parse new products. It's always fun to talk about new products that don't necessarily end in X and get some word out there about those. And we'll definitely have to bring you back on again when you get those open interest numbers up a little bit and we get some of these new products launched. We can talk about how the uptake is and what you're seeing in some of the activity in these products.
Great.
Yeah, and I'd love to get you on for a whole show to kind of just talk the general market because I'm sure – in your 70-plus years of trading, there's a ton of knowledge in there. It's like you've probably forgotten more than the three of us have ever learned in trading over your trading career.
Being as old as dirt, I appreciate that, and I would love to come back, and I appreciate the time on your show, guys.
This is why we have a fun time getting guests, because we compliment them on one hand and then we slap them in the face with the other. So it makes return visits a difficult thing.
I just find it nice that I'm still on this side of the dirt.
There we go. Well, Paul, thanks again for coming on. Like I said, we'll have to bring you on again down the road when we can talk a little more about these products and what's been trading out there in the alpha products.
Thank you very much.
The Trading Block.
And welcome to the Trading Block. This is the segment of the show where we discuss what's been lighting up the tape, what's been moving the broad market, what has been going on in the major indices. And it was, as Mr. Sebastian alluded to earlier, a bit of a sell-off, but perhaps not the, how did you put it a few shows ago? It's your older brother jumping out of the closet, not the knife-wielding psychopath or something like that?
Yes, that's exactly right.
It was one of your fantastic allegory/metaphors that has eluded me at the moment, but yet...
No, I think that makes sense. It's the friend out of the closet, not the knife-wielding maniac. People don't feel this is a real threat. They're scared, but they're thinking, what's the worst that's going to happen? He's going to give me a noogie and pull up and give me a wedgie and maybe tack me to the wall by my underwear. But that's about it. It's not the knife-wielding maniac that's going to cut you up like you're Drew Barrymore.
No. And so, we closed down today. The S&P down nearly 16 handles. The Dow down about 130. The NASDAQ down 44. And the good old VIX cash up 0.84 points to 18.27. And on a personal note, Mr. Sebastian, I'm surprised you could make it on the show today, given the grievous loss you suffered last week in the form of Macho Man Randy Savage.
Oh, man. Oh, yeah. Wouldn't have missed it. I cannot believe it. Downers Grove's finest, Randy the Macho Man Savage.
Is he a local boy? I didn't even know that.
Yeah, he's from Downers Grove, Illinois. And he lived in Burr Ridge for probably 30 years. So I don't know if for those that you don't know, Burr Ridge is a suburb of Chicago. So, he was a long time Chicago resident, had moved to Florida. And so now that the Hulk Hogan's the only one left from that famous tag team fighting team between him, Miss Elizabeth, and Randy Macho Man Savage.
Yeah, they're both gone. I figured you would be the one to be up on your Randy Savage trivia.
No, I mean,
I think Grigas is too busy going to monster trucks to remember his old 80s wrestling.
No, I'm a bit the flying elbow. That was his signature move. I'm a huge Macho Randy Savage. Actually, I have him up on my IM at work right now. It's for tribute.
Oh
yeah, I swear.
Are you snapping into a Slim Jim right now to celebrate his?
Yeah. He was great. He was great in Spider-Man. You name it. I mean, that guy was the best.
So. And what happened? He had a heart attack while driving.
He had a heart attack while driving and smashed into a tree, and apparently that still didn't kill him. He didn't die until he got to the hospital, apparently. So double whammy for the Macho Man, and he was still going.
Takes a heart attack and an accident, and he's still ticking. That's how tough that guy was.
He probably was signing autographs on the way to the hospital.
Yep.
Well, before we go down the Macho Man Randy Savage rabbit hole, as fun as it would be, maybe we should have a new segment, the 80s wrestling retrospective segment. But, of course, the sell-off today was driven in large part by the concerns over European debt, driving a lot of the selling pressure today. Of course, the S&P cut their outlook on Italy to a resounding negative. We also saw Greece's credit rating downgraded on Friday, and that collectively tended to push us off the minor cliff that we saw today in the markets. And, of course, the dollar was up, which hit the commodities a little bit today. And, Mr. Grigas, since Uncle Mike isn't here, do you have any commodity rundown for us?
No, I mean, other than, we're looking at finally revising our margin requirements on silver.
You guys haven't followed suit yet?
We kind of knee-jerked, and we're at $40,000 a contract right now. So, I'm the customer advocate. I think, if you raise requirements so much and you price everyone out, then you have no risk, and then you make no money, and you close up shops. I mean, I like to have availability to have people trade these products. $40,000 is an $8 move. It's a 22.5% move with the silver trading around $35. It's kind of excessive, so we keep pushing every Monday to get risk to lower that back down. I think the exchange is at about 21,000 right now. I think silver had down 40 cents midday today. Let's see where it's currently at. We got about another 30 minutes on the clock here. July silver's down only 7/10 of a cent. It's down 1 penny.
Mm-hmm.
So that vol, that spike that we have, as most firms are, they're very reactive. We didn't see it coming. Now we're trying to catch up, and now we're pretty much pricing people out of this market. And now we're looking at everything else, and from a risk standpoint, they just want to raise margins across the board, and then nobody gets to trade.
Silver volatility is a sale right here. I'm telling you, it is still crazy overpriced at 45%. I think it's going to drop to maybe 36 before we even get a break. Because, I had an interesting discussion, John. You'll like this. I was talking to a client of mine, and he asked me this question. He said, Mark, does volatility have a support and resistance, just like a stock? And, I'd never had that question posed to me in that manner. And, I told him no. It really doesn't, except for one, the mean. And And so if you look, because volatility is so reactive, it's not something that it is based. It's a derivative, so there really is no kind of temporary floors or temporary ceilings. It is what it is. So I'm looking at silver vol, and when I look at this June volatility, I think that we could be trading at closed at about 43%. I think it'd be trading 36 by the end of the week. I mean, that's a huge sale. So you heard it here first, folks.
Sell vol. Sell your silver. That's an interesting question too about the support and resistance in volatility. Because you're right, it doesn't really work the same way. It's not like you can go crank a Fibonacci on vol and get your support and resistance levels. Speaking of vol, we talked a little bit earlier about good old VIX and how our friends over at the Journal were writing about the popping in upside VIX call skew and corresponding downside SPX skew. And it looks like now it seems to have flattened out a bit.
That's all gone. All gone.
Once we bounced off that, what were we, down 150 at one point today? Once we bounced off that, the fear was gone again. It's amazing how little it takes to deflate that skew up there. How's your CBOP these days?
It's super low. Super low. Actually, you know what? I take that back. It's actually kind of high right now. It's in the let me take a look here. I haven't calculated in a while, but if you were to, we haven't had the 415 number come out today. CBOP would be a lot more useful if they would update this thing more than once a day.
Yeah, intraday.
Times it's about 23%. So about normal, actually, to tell you the truth. And one of the interesting things is that vol was absolutely, in a real strike-by-strike basis, it got crushed today, especially considering coming off a weekend and the market down 16 handles. Coming off a weekend, you expect vol to be up maybe 0.7% as is in the VIX, okay? You expect the VIX to be up 0.7% as is. And down 15 handles, you would expect VIX to read up another minimum 1 point from the slide down. So if vol completely stayed the same as it was on Friday, I would say we'd be up about 1.5 to 2 points in the VIX, okay? Just based on the price move and coming off the weekend. The fact that we were up 0.8% should be kind of descriptive of how much they just, anytime we get a pop, they just unload it. I don't know why, but it's really creepy. It's almost eerie. I don't know.
The bulls are in charge. There's no deterring them. They'll step back a little bit, but they'll come back with the horns as soon as it turns around again. How many times have we talked about this now? I mean, how many times have they done this over and over again? Every time. They don't want to keep that skew elevated for whatever reason. They're not a concerned bunch of people. Not much worries them. All right, and with that, we're going to close out the old trading block, and we're going to roll right into the odd block.
The odd block.
And welcome to the odd block. This is where we parse the interesting and or the unusual options activity that's lighting up the tape today. And we're going to start off with an interesting one. MEMC Electronic Materials Inc. Now, you think their ticker symbol would be MEMC or MEM, but no, it's WFR. There should be a rule against having an acronym in your name and then using it as a different one for your ticker symbol. But for whatever reason, they are WFR. They closed at $10.17, down 13 cents today. This is the name that does about 7,500 contracts a day. They did 19,000 today. They're based in St. Peters, Missouri, and they develop silicon wafers for semiconductors. And we saw a size opening bullish call buy right in the morning this morning on the June 10 strike. We saw well over 10,000 contracts go up with a total of 13,000 on the day, including one of them in a big block. A block of 8,500 for 50 cents. This is on a previous open interest of 938 contracts. So this is all opening paper on this strike. And you first look at this, you're like, whoa, wow, we first saw these numbers coming in, and our people wrote it up. It was there's a lot of explosion of upside interest. I wonder what this is. But then you look at this name a little bit, and this name has lost some significant value since it hit 1504 back in February. It's down, roughly 30% since then, and it hit $9 at one point recently. And so if you look at some of the open interest on this, there's actually 12,500 open interest right now on the June 12. So it's looking like this guy actually probably rolled down to the 10 strike, or at the very least legged into a call stupid. Too bad Tusaw's not here, because he didn't close out the 12 strike yet. But Tusaw will be very excited that he's legging into a size call stupid. This guy's throwing around some significant open interest on this one. So it looks like he's just re-hedging his bets, as it were, and moving it down to the 10 strike. But a lot of size bullish paper right now I keep wanting to say MEMC, but it's WFR. And they also have a conference they're speaking at coming up in a couple of weeks. But yeah, so a lot of potential rolling or legging into a call stupid there for size in good old WFR. And then we're moving on to Las Vegas Sands Inc., ticker symbol LVS. They closed at $40.11, down $1.63 today. They had a good day, good old LVS. This is the name that does about 90,000 contracts a day, and they did about 90,000 again today, so no change on the volume side. What was interesting really was that A, there was a lot of volume, but B, it was decidedly mixed. You don't see this very often in a name like this. There's so much volume going up, but yet not particularly one-sided. We saw the name, they're down almost 4% at one point the session today, and we saw bears coming out as well as bulls on various strikes. A lot of bulls jumping into the weeklies on the May 40s and the May 41s. These are ATM and near the money strikes, picking them up for about $1.04 and 48 cents each. And these went up about 1,400 and 4,000 times respectively today. So pretty sized near-term bulls right now in LVS, as well as we saw in the puts. The good old May 40 and 41 puts actually had more of a two-sided paper, which is interesting. And then we saw call sellers driving out into June, hitting the June 44, June 45, and June 46 strikes. Those have about 1,800, about 4,000, and 2,500 total volume on those strikes, respectively. And we also saw put buyers coming in on the June 40s. Like I said, this volume is really... June
38's put up huge volume today, 13,000, yeah.
The June 38s were the biggest of the bunch, and those were actually predominantly sellers. That was about 11,400 went up at a good clip of that amount went up in one clip, and a total of about nearly 13,000 on the day. And the bulk of those were sold for about 60 cents. So it is kind of a across-the-board volume, but a ton of it, where you got the 40 put buyers coming in, you got 39 puts coming in, and then a whopping ton of 13,000 almost June 38 put sellers. Not an earnings play out in LVS, because they had earnings back on May 3rd. So it looks like, just a lot of really size and interesting but extremely two-sided papers. If you were a trader out here today, you were a market maker, you actually had the dream. You had two-sided paper going to leg into and out of these trades. So a lot of interesting size positions across the board in LVS. So no consensus of opinion, which is kind of interesting. Usually we see one big block of something going up in this, but we saw it across the board. And we're going to close it out today with LNG, which is Cheniere Energy, I believe is how you pronounce that. And they closed today at $11.76, up $1.72 or 17%. This is a name that does about 7,500 contracts. They did over 52,000 today. And essentially, this is actually a review of some activity we saw back in April. We saw on April 14th, we saw a trader come in and spend about $1.6 million, pick up about 20,000 of the SEP 12 calls for about 82 cents a piece. So he spent about $1.6 million on these, and the stock was trading $7.74 at the time. So these were an extreme flyer on these calls, and it took a lot of people to notice that, because it just seemed like an odd, extremely expensive lottery ticket to be picking up on this name unless this guy knew something. And didn't look like that great of a trade until recently, when the stock it's a liquefied natural gas provider. They gapped up 44.5% recently on news they were allowed to export more fuel, and then today they rallied to as high as $12.81. So these calls are suddenly looking like a genius play indeed. At one point he was up about Yeah, about 3.5 times on his money for this one, up to about $5.7 million on this play. So these, and so far he hasn't taken any of these off the table yet. The open interest is still about 21,500 on that SEP 12 strike. So he's still riding these size upside calls, and looks like he thinks this is part of his game plan, and he wants to run this a little bit further. Apparently, thinks there's more upside to go in good old LNG. But yeah, a extreme flyer that turns out to be, who would have thought it, a little more, maybe have a little more insight into this name than you would at first think. So yeah, some size upside activity pays off in LNG, and that's going to do it for today's odd block. And with that, we're going to roll right into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express block. This is the segment of the show where John Grigas takes over and Mark and I take a much-needed beverage break. Go ahead, Mr. Grigas.
Beer.
Well, beer. To add what Paul was saying, just in case you have any more questions, you want to find out more about the Alpha Index options, we do have a banner on the Option Chain page for Options Express customers. Log into the account, go to Quotes, Option Chains. You'll see a nice banner there right at the top. Simply just click on that. That'll give you some general information on the product, a little recap almost of what Paul described. You also have the contract specs up there as well. And, of course, there's always Google. You have a nice FAQ out there as well that I read a few weeks back. Here at Options Express, what we're hearing this week, and I don't know how much you guys talked about it last week, but it would be the LinkedIn IPO. I'm sure you guys discussed it on Thursday.
What is this LinkedIn you're talking about? I'm not familiar with this name.
Yeah, but I don't want to continue to talk about that, but a question that we've gotten a lot since the IPO is when can I short it? On the Thursday of the IPO, we had about 100 requests to short the stock, and of course you can't short a IPO the day of. And so I had a chance to go on the SEC website, read some of their SHO regulations and shorting on IPOs and dates. And you think the SEC would write real dry, boring stuff, but that wasn't the case when it came to short selling. But from what I found out is that you can't. The underwriters cannot purchase the shares on margin the first 30 days. Of course, we're in the secondary market. We're not in the selling group. So the first day could be bought on margin would be, I believe, the 24th, and then we would have settlement on the 27th. Okay, so the first chance that Options Express and other broker-dealers are going to have to lend it out in-house is going to be on the 27th, is when we plan to make it available to our customers. Now, looking at our positions firm-wide, we don't have many people holding shares of LinkedIn. Obviously, when it's trading $122 and change for the high on Thursday, it's an expensive stock to buy. But watching it that day, it was pretty much like trading silver futures in the way it was moving around. We saw a lot of people scalping it. They also have a very small float. I think it was about 9 million shares. So the cost to borrow that from other broker dealers on the 27th is going to be extremely expensive, and it's pretty much going to rule out us trying to get it from other firms. So I expect if we do have it to short, it's going to be very limited, and we'll probably be gone within the first half hour. From what I've heard on other press releases too, people get this question a lot about LinkedIn and general IPOs. When are we going to have options on this security? It's also looking like Friday. The SIBO, I think, put out a press statement, but is that what you guys are hearing? The 27th is the first day for options?
I think so. It looks like they got a little bit of thrown into flux a little bit when it blew past all the initial strikes they were going to list. They probably listed
I think they give it. They're going to give it a few days to settle down, and then. It was up. It had a range of $42 on Thursday.
That thing is going to be so hard to borrow. It's going to be unbelievable.
Yes.
And you know what? And it's still going to be a total sale. I'm sorry, but That's insane.
This will be a fun exercise for our listeners into looking at a hard-to-borrow stock and seeing how that impacts the prices out there once the options list.
John's going to get 90 questions from people. How come this call is trading below parity?
And then the people that do short it, by the time settlement comes, 3 days after they short it, they're probably going to get bought in. And then I'll have to have an argument with the customer on how we don't have the right to buy them in. And if you haven't noticed lately, the SEC is very, very tough on naked short selling in the business.
It's evil to buy. It's really evil to be shorting. That's wrong.
It's unpatriotic.
This is America. Stocks go up.
Yeah. Feel free to. If you could do anything, short those Chinese stocks that have accounting fraud. They don't use those GAAP accounting rules over there. So we had about 7 stocks that were halted through May expiration. It was nice getting a hold of those people when they're in a LFT 2015 put spread and they're short the 19s and they don't know if they should exercise their 15 puts because of the fact that who knows where this thing's going to reopen up at. But shorting LinkedIn. I mean, we're going to get another lot of requests. So if you could. Maybe wait for the options, buy some deep in the money puts. But I'm sure Sebastian will be selling vol 8:30 Friday morning on LinkedIn.
Oh, you know it. The vol's going to be too high. Everything is going to be too high. I'm going to be what I like to call putting on the Gregas, selling the dream, living the dream.
This thing's down off like 30 odd handles from its high now. It's really
Oh wow! It's still 2 times too expensive.
Oh, at least. It's just funny how much of a range it's had.
Did you hear the stat about when LinkedIn was trading at 120, the multiple of which it was trading relative to its revenue? If you applied that to ExxonMobil would be worth more than the United States GDP.
There's no bubble.
No bubble here.
Social media is never no bubble at all.
People mock the Groupon one, but at least Groupon makes some cash.
At least they make money.
Yeah, I mean, LinkedIn makes money too, but not on the orders of not to merit these valuation
LinkedIn
levels.
Makes revenue. I don't think they make money.
LinkedIn has only had 2 profitable years since 2003, and last year was their first profitable year where it was at any significance of $2 million. And then they had another profitable year, but it said it was like 6 figures. It was a joke. And I think leading up to the IPO, they made themselves profitable. You know what I mean? I think they. Like a lot of firms that are going IPO, they make cuts or they boost stuff up. And reading some of their statistics, 80% of their employees have worked there less than 2 years. I mean, it's like a shell of a company that, feels like 1999 a little bit, Pets.com, where's that little hand puppet out? Sign up for LinkedIn.
Do you need to be LinkedIn with me?
Uh-oh.
I've had like 4 requests this week, and I'm like, I'm just going to close that account down.
There you go. And that is in no way an endorsement of Options Express saying sell LinkedIn. Is just a questioning of their business model. I like it.
Right.
All right, and that's going to do it.
You should be doing. You should be doing your due diligence when you purchase anything or when you look in any company.
I concur.
That's my biggest question when people go, hey, I need to buy these. I go, what do they make? What do they do? I don't know. Okay.
You're going back to the .com days. I don't care. They're online, right?
What is LinkedIn's revenue? I don't understand it.
It was 12 million, I think, last year.
Where does it come from? Oh, it's ads. It's all ads.
Clicking
they
on ads?
They have a ridiculous ad sales staff. I remember reading a couple years ago that like said their Chicago ad sale office alone was like 20 people, which to me sounded excessive, considering I run an online business based on ads. I know how much that stuff costs and everything else. And 20 people just in Chicago alone is a serious sales force. But that's hard to overcome that staffing.
That seems just wrong. I mean, I'm looking at my page and there's one little ad on there. I don't know what else you would.
They sell things like premium job listings and a few other things. They sell obviously click ads within the site and quote unquote targeted ads based on your profile things and that sort of stuff, which is about as targeted as any of those general things like Facebook or LinkedIn can be. But yeah, so it's based on little ad things. I think a lot of it is probably job listings these days too. Keep getting ads or emails from them saying post your ads here. We'll give you X number of premium listings for free to try it out. And so they do a lot of that as well. They're trying to be a mini monster, I suppose. But yeah, none of it I think is substantially accretive so far, at least to overcome their ridiculous staffing requirements. All right, and that's going to do it for the old Express block, or should we say the Web 2.0 bubble bursting block. And we're going to roll right into Around the Block.
Around the Block.
Welcome to Around the Block. This is the section of the show where we discuss what's coming up on our collective horizons for the next few sessions. And looking at the old economic calendar, not too much lighting up the old tape. This week we got GDP on Thursday, revision anyway, and we have durable goods on Wednesday. And that's kind of the bulk of the economic news. Earnings as well, not exactly a super strong earnings week. I mean, we already had Krispy Kreme, so what's bigger than that at this point from an earnings perspective and a market-moving perspective? Certainly nothing.
KKD? Oh, yeah. Well, I'm just waiting for my first LinkedIn earnings report. That's going to be fun. Yeah, no, there's not a – I think we're kind of through most of the earnings season. We've got City. No, I'm looking. Trying to find a decent look into earnings that seems to matter, and the answer is there ain't a lot.
Yeah, not too many.
There ain't a lot. The one thing I would point out is that we have the long weekend coming up, so don't be surprised if we see a bunch of people try and sell premium. Even earlier than
tomorrow.
Yeah. I mean, it's unbelievable, the premium sellers. I mean, one thing to notice is you can actually get yourself a little bit of a deal sometimes if you really pay attention.
Going into like Friday afternoon after the premium guys have just gone crazy, and anyone who's selling further is selling into like Tuesday and Wednesday with decay, then you might be able to get a free weekend out of it. But yeah, so I mean, not too much lighting up the old earnings tape right now as well. And in terms of commodities, obviously a lot of interest still going on in good old silver and gold and oil. Took a little bit of a breather today because of the dollar rallying. So I'm sure a lot of people looking for continued upside. Hopefully most of them have unwound their 200 strike positions that they were opening up a month or so ago. Good old. I know you had a few Day of Rage calls, didn't you, Grigas?
Oh God, weeks of them. Yeah, it was tough, but it seems like that ship has sailed as far as the $8 overnight moves and the calls at about 10 o'clock at night about I got to blow a half dozen accounts, and but I mean I think crude oil will start garnering some more interest. We got the inventories this Wednesday at 9:30 Central. I mean crude, if you look at a chart, has been in a range for the last 8 days, has found support almost every time. Got a lot of dojis on the candlestick chart here for daily. Found support at 95, so I'm hoping with this continued close. We had another down day. I think it was down 3:30 at one point. It closed down. We're closing here in like 10 minutes. July crude, which is now the front month, closed down to 265, or it's near close. I think I have a little mental short in my head, but I think you could see some continued downward pressure on crude.
You short? I refuse to believe it, sir. You're such the cheerleader for this market.
At Options Express, you can default your trade ticket to either long or short. I don't think mine's ever seen a buy on there, but unless I'm buying puts. But
I didn't know you could do that. You can set the bait to default to sell. That's hilarious. I didn't know that.
Yeah, default to sell, stock or options, and the quantity. So with my S&P, my futures, over the last 6 months, it's just been sell one market. That's it. Just load it up and fire it. But yeah, earnings quiet. Even today, no economic numbers. Crude oil, silver, even maybe some interest rate futures on the commodity side. If you can see the 10-year and the 30-year have bounced back significantly over the last month. Those are the three that we're watching here.
It will be interesting to see when the options do go live on LinkedIn, just how many calls you get for that. That becomes your new Netflix. Everyone just calling up, looking to put on positions in LNKD and tweak their margin and all the other. Sell tons of short-term premium. I wonder if this will be the first name to list with weeklies.
Yeah, maybe. That's a great point. I'll have to check and contact the CBOE and find out if they're going to be doing that. I mean, it is nice to have one of these big, tech firms IPO. It reminded me of Google when they went and had the entire day. CNBC had the ticker in the lower left-hand corner. Everybody was talking about it. Every other phone call was about it. It did bring some interest into an otherwise pretty slow week.
I'd imagine your darts were up across the board just off the interest everyone was getting from LNKD.
Yeah, people were trading it like a future, just flipping it. Buy 500.
Lovely.
I mean, I saw, I got a good story too. I had some guys trying to call these people in the pre-market with these market orders on LinkedIn, and I called the top guy on the list. He's trying to buy 4,500 shares at the market, and I'm like, this thing might go crazy here, right on the open. And I'm like, is there a upper level that you want to pay in LinkedIn, and you don't want to pay over? And he goes, oh, I don't want to pay any more than $47. And I've never really. I had such a reaction to laugh. I'm like, this thing is we're thinking 80, and he's like, oh no, cancel that. I mean, his account would have been debit six figures, if it had gone through. But we got him out a few minutes before the open. That's it's the kind of thing we do here at Options Express. We're looking out for our clients.
You see these market orders coming in on these IPOs. Those should be auto cancel.
Exactly.
Auto cancel order. All right. Well, that's going to do it for Around the Block, and that's also going to do it for this episode of the Option Block. I want to thank all of the usual cast of characters for coming on the show. And since Uncle Mike is not here, I will give a plug for him. Listeners should go visit knowyouroptionsinc.com, take their free 18-minute portfolio review, and see what Uncle Mike and the team can do for you. And of course, we are also joined here by good old Mark Sebastian from Option Pit. Mr. Sebastian, what is coming up in the land of Option Pit?
Tomorrow is number 2 on my trading ETFs in a volatile market. It should be a lot of fun, and we're just busy. Come and check us out. The new issue of Expiring Monthly goes out today, so that's another thing to look at. But I've just been just completely jacked up. So come and visit optionpit.com and see our website.
Yes, indeed. Go see their website. And then
optionpit.com.
Mr. Grigas, what is going on over at Options Express Land?
Well, I keep pushing the Forex. I'd like to see some questions people call up, and or even some trades, better yet. So segment your money over, start trading the Forex. Put a lot of time and energy in there. I hope it interests some of these people out here. Other than that, the alpha options, and that's about it.
And of course, if you'd like to hear more of the unusual activity or any of the breaking options news or any of the other items we discussed on the show today, then surf on over to theoptionsinsider.com or visit our forum where you could post questions and comments for the host. Just scroll on down to the Option Block forum, and we're looking forward to hearing more from all of you out there in the listening audience, and we'll have that listener mailbag on the show again really soon. And of course, I'd like to thank our guest, Paul Gigante from good old NASDAQ OMX, and be sure, if you're interested, to go out there, explore the alpha products, because they are indeed very interesting and they do serve an interesting niche. I want to thank all of our listeners out there for downloading and streaming and subscribing to the show and making it such a success. And we'll see you all next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.